Have you ever wondered how the wealthy continue to grow their wealth even in uncertain economic times? Today we're pulling back the curtain on one of the most powerful wealth-building strategies used by the successful and the savvy: real estate investment. In this video, we'll break down various investment strategies, providing a clear step-by-step guide to help you navigate your path to financial prosperity. So let's dive into the fascinating world of real estate investment. Before we delve into the strategies, it's crucial to understand what real estate investment entails. When we talk about real estate investment, we're referring to the practice of buying property with the intention of generating income or capital appreciation. It's a strategic move, a calculated decision made to bolster one's financial portfolio. And it's not just about buying a house to rent it out, though that's certainly part of it. The world of real estate investment is much bigger and far more diverse than many realize. There are, broadly speaking, 4 types of real estate that you can invest in, each with its own set of opportunities and challenges. First, we have residential real estate. This includes everything from single-family homes to multi-unit apartments. Residential properties can be rented out to tenants for a steady stream of income or sold at a higher price for a profit. Next, we have commercial real estate. This is where you'll find office buildings, retail stores, and shopping centers. Commercial properties can bring in significant income, especially when they're in high-demand locations. However, they can also require a larger initial investment than residential properties. Then, there's industrial real estate, which includes warehouses, factories, and distribution centers. These properties can be rented out to businesses and tend to have longer lease agreements, providing a more stable income over time. Lastly, we have raw land. This is undeveloped property that can be transformed into any of the other types of real estate, or simply held onto as its value appreciates. It's a blank canvas, full of potential, but it also comes with its own set of risks and challenges. Each of these types of real estate offers unique opportunities for investment, but they also come with their own risks. The key to successful real estate investment is understanding these risks and knowing how to navigate them. It's about more than just buying a property and hoping for the best. It's about making informed decisions based on a deep understanding of the market and the potential for growth. Now that we have a basic understanding of what real estate investment is, we can explore the different strategies. The first strategy we'll discuss is the buy and hold strategy, a favorite among many investors. Now, what does this entail? Simply put, it's a long-term investment strategy that involves purchasing a property and holding onto it until it appreciates in value. It's a bit like planting a seed and waiting for a tree to grow. Think about it. You buy a property today, and over time, as neighborhoods develop, economies grow, and inflation occurs, the value of that property can significantly increase. This strategy is essentially a game of patience, a bit like waiting for a good cheese to mature. But as with any strategy, there are both benefits and potential drawbacks. The benefits are clear. Over time, you could see substantial returns on your investment. This strategy also allows you to build equity in the property, which can be leveraged for further investments down the line. However, the potential drawbacks must also be considered. This strategy requires a significant initial investment and time commitment. Market fluctuations can also affect the property's value, making this a potentially risky strategy if the market takes a downturn. Moreover, while your property is appreciating, it could incur costs such as maintenance, property taxes, and insurance. These are factors that you'll need to consider and plan for. Despite these potential drawbacks, the buy and hold strategy remains a popular choice. It's all about playing the long game and having the patience to wait for your investments to grow. While this strategy requires patience, it can be highly rewarding in the long run. Next up is the fix and flip strategy, a popular choice for those who enjoy a hands-on approach. Imagine yourself as an artist, but instead of a canvas, your masterpiece is a property. The fix and flip strategy is a real estate investment method that involves acquiring a property in need of repair, breathing new life into it through renovation, and then selling it for a profit. It's akin to finding a diamond in the rough and polishing it to its full potential. At the heart of this strategy is the concept of added value. Essentially, you're buying a property at a lower cost because it needs work. Through your investments in renovation, you increase the property's value, allowing you to sell it at a higher price. It's an effective way to generate quick returns, particularly if you have a keen eye for properties with untapped potential and a knack for effective renovation. However, as with all investment strategies, the fix and flip approach is not without its risks. The key here is to accurately estimate both the cost of the necessary renovations and the potential selling price of the property once it's renovated. Underestimating the former or overestimating the latter can quickly turn a promising flip into a financial flop. It's also important to remember that the real estate market can be unpredictable. While you might buy a property with the intention of flipping it quickly, market conditions could change, leaving you holding onto the property for longer than anticipated. This can tie up your capital and potentially lead to additional costs. Yet despite these risks, the rewards can be significant. A successful fix and flip can yield a substantial profit in a relatively short time frame. Plus, there's the satisfaction of transforming a fixer-upper into a desirable property. It's not just about the money, but also the creative fulfillment and the tangible result of your efforts. For those who enjoy a project and a quick return on investment, the fix and flip could be your ideal strategy. Now let's talk about the rental property investment strategy, a great option for steady, passive income. Imagine being the owner of a property. You've got a charming little house, or perhaps a sleek modern apartment, and instead of selling it, you decide to rent it out. This, dear listeners, is the essence of the rental property investment strategy. Essentially, you're buying a property with the intention of becoming a landlord. But it's not just about buying a property and sitting back while the rent rolls in. There's a lot more to it, and it's important to understand the intricacies of this strategy. The key to successful rental property investment lies in ensuring your rental income exceeds your expenses. These expenses include mortgage payments, taxes, insurance, and maintenance costs. Hence, it's vital to do your research, select a property in a desirable location, and set a rental price that is competitive yet profitable. This strategy is often praised for its ability to generate a steady stream of income. It's like having a business that operates without you needing to be there all the time. And as property values typically increase over time, you could also benefit from capital appreciation when you decide to sell. But of course, it's not all sunshine and roses. Being a landlord comes with its fair share of challenges. There's the responsibility of property maintenance, dealing with tenant issues, and the risk of vacancies, which can affect your income. Nevertheless, with careful planning and effective management, these challenges can be mitigated. Additionally, it's worth noting that this strategy requires a significant upfront investment. However, the beauty of rental property investment lies in the potential for leveraging. This means you could buy a property using a small portion of your own money and a larger portion borrowed from a lender. So, to sum it up, rental property investment is a strategy that involves purchasing a property to rent it out, with the aim of creating a continuous stream of income. It's a strategy that requires a hands-on approach, meticulous planning, and a good understanding of the property market. If you're looking for a steady income stream, rental property investment could be a fantastic choice. Now that we've covered the basics of real estate investment and explored 3 popular strategies, it's time to wrap up. We've taken a deep dive into the pool of real estate investing, starting from the shallow end with the basics, where we learned that real estate investing is all about purchasing, owning, managing, rental or sale of real estate for profit. It's a game of patience and strategy, requiring a keen eye for potential and a solid understanding of market trends. We then plunged into the deep end, exploring the buy and hold strategy. This is a long-term investment strategy where investors purchase properties with the intention of holding them for an extended period. The goal here is to capitalize on potential appreciation over time, while possibly earning steady income through rental. Next, we navigated the choppy waters of the fix and flip strategy. This strategy is for those with a flair for transformation and a knack for quick sales. It involves buying a property at a low cost, investing in improvements and renovations, then selling it at a profit. It's a high-risk, high-reward strategy that demands a lot of time, effort, and expertise. Finally, we docked at the rental property investment strategy. This strategy revolves around buying properties to rent them out, turning a steady profit over time. It's a great way to generate a consistent income stream, especially when rental demand is high. Each of these strategies has its unique advantages and challenges, and it's essential to remember that what works for one investor might not work for another. It's all about finding the strategy that aligns with your financial goals, risk tolerance, and time commitment. Remember, every investment comes with risks, so always do your research and consider your financial situation and goals before diving in. Happy investing!